Alright, this is a game plan review. I haven't done one of these in a while. I think it's been a couple of months. This is where I take the morning idea sheet, or the stuff that I went over in the morning meeting, and just kind of review how it played out. So here's our sheet, and the first stock we're going to take a look at is DSW. It was gapping down on earnings warning. Support level 52, resistance 54. Very thin stock, so you need to see some volume come in. So let's take a look at this one. So here's the 6-month chart on this. The 52 level was from the 6-month chart. Generally when we see a big gap down on an earnings warning, what we look for is to see what happens at a longer term level. If it holds below, look to trade on the short side. If there's buying down here, maybe look to play it for some type of bounce back up to this 54, the next big level. If it gets above there, then play it for a gap fill. And normally it only trades a couple 100,000 shares, and that's why I said be a little bit careful on the open. But as the market opened, a ton of volume came in, and so I traded it right on the open, and I'll walk you through my trades. Basically, initially the selling comes in. I watched it. I think it was like a 51.88 buyer. Actually, let me show you the tick chart. So it came in, market opened, and I'm usually very cautious in those first few minutes. The market's usually thin for the first 15 minutes. But I watched it drop here. There was like I think there was a bid right here. There was a buyer, and they dropped, and it came all the way down to 51.20. Watched it for a few minutes, and then I noticed when it popped back up to 51.80, it failed there, but there was buying a few times at 51.40 and didn't make a new low. So I looked to trade it for a bounce, and I got long, I believe, right in here around 51.44 or so, and it bounced up to 52, where I lightened up because of this failure at the longer term level. I was waiting. I wanted to really see it hold above. It actually had a little bit of trouble right here. You can see it tick down. I think I lightened up some more, but then I bought back all the shares that I sold onto this break right here, and I got flat into this up move to 53, and actually shorted some with the intention of covering into a pullback into this area and then getting long, and that's what I did. I covered and actually got long. I started getting long a little bit too early here, and when it popped down here, I actually bought some more. It popped up. I managed the position by getting light, and it pulled back some more, and I eventually saw it supporting here, and so I put my stop below 51.5 right here. So again, it was traded it long, short, and looked for the pullback here to continue. It started to hold below. Now I was getting off the desk. It's probably the primary reason why I didn't get flat up here. I was already, let's see, where did I get off the desk? So yeah, I got off the desk in here somewhere because I was stopped out here and I wasn't on the desk anymore. So if I was still here, I probably would have, when I realized I wasn't getting back above 52, would have gotten flat there. But anyway, the rest of the day it really didn't do anything. It spiked up a couple of times to 52.60, never got below 51.5 again. So basically, really the money was right on the open. A lot of times these stocks gap down a lot, you'll catch a trend that's something like a gap fill or a follow through to the downside. In this case, really all the money was the initial up move, and then this pullback here. So not a great stock today. The next one I mentioned was UNG. This had a big move last Thursday, and I was looking for some follow-through, upside follow-through. Rested Friday after the huge move on Thursday, looking at the long, holding above 1750. And let's see how this one played out. This one actually played out kind of the way we talked about it in the morning meeting, but I was off the desk. Basically what we wanted to see was this thing get above 1750 and hold. You can see that before the market opened it was there, and when it came back again, got up to 60 cents, shallow pullback to 50. This is actually textbook how you would want a stock to trade if that was your setup. You want to see it get above your trigger level, which was 1750 in this case, and when it gets above there, have a pullback to the level, hold, and then move higher, and there you have it. And this is a stock you wouldn't risk more than 10 cents, and it ended up going up about 80 cents, so it turned out to be spot on, very nice. The next one was BKS. BKS had a new partnership causing a gap higher. Was looking to fade the gap in the 17 to 1730 area. The reason I wanted to fade this one is we can take a look at the 6 month and that'll explain it to you. So here was the gap up back on February 22nd when there was some big deal with Microsoft and they were going to compete with Amazon and blah blah blah. So what? Oops, sorry, we're looking at you. UNG still. Okay, here's the gap up. So we had this big gap up here on April 30th. They gapped it up to like $25 a share. This was, they couldn't really, when a gap is this big, it's almost like the market has no idea how to price the value of the deal. But plenty of people were willing to sell on this gap, and it ended up being one of the better short plays we've seen in a while on gap ups. And so I figured, actually I'm going to do a 50 days. So here's this big gap up right here. So this is the pre-market, April 30th, and you can see it was actually, it was actually pretty phenomenal. So had this big gap up, and once it broke that support level at $25.70, it went down to $22 a share, and then it just kept on going, and the days following that was pretty phenomenal. And so today they announced the news, oh, Microsoft partnership, blah, blah, blah. And I was thinking there's no way people are going to get fooled again. And they're going to sell this because it looks like the stock really actually wanted to come all the way back down from the original gap price, which is $13.50. So anyway, zoom in on it. And the reason I picked this, I'll show you, the reason I picked the area that I definitely wanted to fade it in was based on going back here to May 25th. Actually, this doesn't really show a good picture of it. So here's the 2 month. So anyway, it was gapping up and it was close to this area here where it had failed around 1740-ish or so. So in the pre-market it was up around 17. I was hoping there'd be one little more pop right on the open and I could just short the heck out of it into this. And then that would really be a trade to hold, a swing trade. But that's not how it played out. I actually saw a person get shorted in the pre-market right here. I'll show you the tick chart. You can actually not really see it, but anyway, somebody had a hidden offer there at $16.85. They took $5,000. I was offering above 17, 17.15, 7. That was like scattered all the way up to like 17.30. But whoever got short there for 5,000 shares, that pretty much was the top in the pre-market. By the time the market opened, it was already coming lower. So the question is, what do you do if your plan is to fade it up here and the market opens and it's much lower? Well, as long as you see the weakness right on the open, what you would do is you would look to short it into some sort of retracement. And in this case, 16 would be your natural spot to do it. It actually came above 16, got to about 16.10 or so. And then later in the day, came down and was holding below 1580. It was very methodical, 1570. And this would have been one of my top stocks if I was on the desk today. Once I saw the weakness come up and then the holding lower and the lower. I do think eventually the stock will get down into the 1350 area to complete that gap fill back on April 30th. So far, 2 out of 3 I liked the price action from today. First one, DSW, not that great other than that quick move on the open. But UNG and BKS trended pretty well. So let's go to second day in technical plays. There are 3 stocks here. First one is Facebook. FB was very strong on Friday. Resistance levels 30 and 32. Very strong into the close Friday. Looking at long and a pullback or a hold above 30. Let's take a look at that one. Okay, so here's the big move on Friday up to 30. And in this case, what you're really looking for is right on the open some type of profit taking down to this consolidation from Friday. So 29.20 to 29.30. And if you can get that there right on the open, you bid there and you start a position. And the next place you want to look to buy it is on a consolidation above 30. In this case, you can see there was a quick down move on the open, didn't quite get to my buy price. And then by 10 o'clock had driven well above 30, and at that point you look to trade it on the long side. Here's a 5 minute so we can get a better picture of how you might want to trade that. So here's the initial drop, and then takes out 30 resistance right up to 30.40. Not sure how easy that would have been to get involved, other than this is a momentum trade right here. It takes out the morning high, momentum trade. Then you look for some type of consolidation, and that's what you got right here at 30.73. Not sure if that's quite enough. Let's go to the 5 minutes. So generally on the 5 minute, the way we like to do this is we like to see at least 4 bars of horizontal consolidation. For me, I might nibble here, but this is not really enough of a consolidation for me to get aggressive. I do like how it held higher at 30.90. If I was buying here, it would have been stopped out into this move here. If you have a stock that drives quickly, strongly on the open, and then has a pullback from the high, what you want to do is really use this level to trade against. So in this case, it's about 30.45 right here. So once it has this pullback and then holds higher, you want to trade against this level. And so, again, you're looking to trade this on the long side, at least till that 32, which was the kind of the longer term level we talked about in the morning meeting. If you see it holding here above 30.60, I'd give it a shot here again, trying to trade on the long side with a stop below this line right here. Gets above the previous resistance from the morning, this 31.20. Have more confidence and add to your position. Eventually it did trade up to 32. I actually was on the desk momentarily when it was here, and I threw up a short. But I got stopped out at this move right here. And I'll be looking to actually trade this one on the short side over the next few days. I'm looking for some type of failure between 32 and 33. The next one is NFLX. This is just something I've been eyeing for a while as for bottoming in the 60s, and had a big move on Friday, broke its downtrend. Ideally would like start buying it around 64.50 today and see how it behaves at the 66. Let's take a look at this one. So again, the reason I talked about the 64.50 pullback was I just like the way it was accumulated in this area here from 64.50, 64.75. Right on the open, very strong stock, just didn't quite come down to my buy prices. Actually drove above $66 a share. You can see twice and failed at 66.5. But this is pretty good price action again today for it, and I think it continues higher. Never really got a consolidation in the morning above 66. You can see on the 15-minute drove up, back down, drove up, back down. Finally in the afternoon, after actually basing here closer to 65, it had a real move through 66 and closed at the highs. So I like this one for some further continuation. And I don't think too many people have noticed it yet. I think it should be fairly tame, probably until it gets above 67.5 or so. Then I bet you it gets a little wilder, starts to attract some more attention. Ultimately, I'd like to see it get to the 72 probably this week. And then finally, last but not least, NAV, the best stock for the last 2 weeks. Support levels 29, 29.80, resistance 30, 35, and 31. Strong on the open Friday, then tight range. Basically looking for it to break out of its range, multi-hour range from Friday, which was 29.80 support, 30, 35 resistance. Moves outside of that range, just trade with the direction of the break. And NAV, here's what we got. We can see that on the open it was already gapping below this consolidation from Friday, so that's clearly breaking to the downside, and we would look to trade that with a short bias. Next major level below 29 is 28. You can see failed there back on Wednesday, had a great down move from there, and actually trended back up to that level on Thursday, and gapped above it on Friday and went. So today was actually kind of almost the opposite of Friday's action, just gapping below a prior key level, and it went. So let's see if we can discern how to trade this. And I'm sure everyone on our desk who's looking at it was looking at it on the short side because it was gapping down below the key level. I did myself try to get shorted right on the open, but I could not get it where I wanted to. I think I was offering, I'm actually not sure why I didn't get it. I think I was offering around right in front of 29.5, and it just couldn't really get above this 29.30-ish here. But the way you want to do this is once you have your bias on the short side, you want to see the first move, which was basically this down move here, watch the retracements. Came back up to 28.80, looked like it was having trouble. This is where you want to establish your short. It supports this 28.50 level. You are probably going to be stopped out into this move right here, unless you're using 29, longer term resistance levels or stop. You could, if you're looking for a move, you'd really want to be playing this down probably at least to 27 then, if you're going to risk this quarter here to give you a really good risk reward. But keeping it tight, I would think some people would get stopped out here, and then look for it to hold lower. It's a little bit messy. You can see it pop back up after making a new low here, pop back up to 28.60. You can say, okay, it's failing here, I'm going to short it again, and if you were using that as your pivot now, maybe you even get stopped out here. Probably not. You're probably going to give it at least 10 cents. And then eventually goes down to the longer term support. I know some people actually did a good job of calling that out on the desk. It's bounced off of this 28 a bunch of times, both on the short and the long side. And you can see eventually work its way back up to 28.80. So I say overall, not particularly good compared to the types of trends we've seen last week. There's 1.5 to 2 pointers, but this move down here, 60 cents, overall I'd say not particularly great. But the reason we keep on looking at it is because of these trends. This day 1, that's day 2. Day 1, day 2, day 3, day 4, day 5, day 6. 6 days in a row of really nice trends. Friday didn't do much other than the opening drive. I'm going to watch this 28 again. I'm going to watch it tomorrow. You can see it held there and pop back up. I'll just trade off of this 28. If it gets below 28, then I'll look for that move back down at 26 to 25 and a half. So it was only 6 ideas this morning. Market's kind of thin. Actually, BKS, which was that idea to short on that fade, ended up being the #1 weak stock today on the radar. Really going to the radar pretty early, 10 o'clock, and trying to take a look at the strong and the weak. Just try to keep it with the top 10, and if they're very in play, a bright red like a CERN or even a CHKP, which was kind of in play, those are what I'm going to, other than the game plan sheet from the morning game plan. Anyway, thanks for joining us again, and I'll try to do one of these by next month at the latest. Thanks.